What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Monday, May 6th. Alright guys, so Palantir here tomorrow. It will be reporting earnings after the bell. On Friday, finished up 78 cents per share. That's plus 3.46%. In regular trading hours, it did rise about 20 cents or so. In the after hours, listen, as always, after hours volume, guys, it's going to be very, very low. So take that after hours movement with a grain of salt. Let's take a look at this. First of all, with earnings here tomorrow, the expectations, at least this will vary a little bit depending on your source. The most common forecast or expectations that I'm seeing are 8 cents on EPS, plus 8 cents, that's positive 8 cents, and revenue $617.61 million. Now, let's look at everything we can here. We're going to take a look at the volume profile from Friday, the psychological levels that I think we need to be paying attention to because the big money's going to be paying attention to them. Here tomorrow into earnings, which of course are after hours. And then we'll finish out by taking a look at the expected move and the directional bias coming out of the chain from Friday. I think all these things together will get us really prepped here for tomorrow, Monday. So let's start here with a quick little volume profile analysis from Friday's trading day on the 5-minute chart. Listen, by the way, if you are new here, Palantir is a stock that I cover every single day. My goal here is 10,000 subscribers, so I appreciate you subscribing to the channel, and I will keep the Palantir videos coming daily. Now, really what we're looking for here on the volume profile, I want to look at this kind of back and forth region, and then we'll just look for anything out of context throughout the day. What we're looking for is a volume profile that either supports or directly goes against, I suppose, the obvious movement that we can already obviously see. It's over with right on the chart, the price action. So if we pull this up, this is like another depth of understanding. This is like taking a look under the hood. We can see here that we got a very contextual open. You get that high volume opening bar and then a quick fade in volume. All right. We got a couple of pops here. However, it's broken up by a green bar. If this was a red bar in the middle, that would be a little bit out of context, but this is broken up. So to me, we can move on from there. This green bar, again, it's too much of a risk of being fooled by randomness. It's one lone bar. Not to mention, we're seeing, of course, massive wicks, which tells me that's a battle bar. Likely a lot of buying and selling occurring on that bar, pumping up the volume, which is explainable. We move through the day, very, very normal. Okay, now, this move here, if we look at the baseline volume being somewhere like where my horizontal gray cursor line might be, or is right now, you start to see volume pop out of context in line with this probably one of the most aggressive upside moves that we saw throughout the day. Okay, and then as soon as volume fades and starts to consolidate, you see that ascending volume immediately pull back. Okay, this here, guys, this is very, very similar to the volume profile that I'm looking at when I'm scalping an in-play stock like on a 1-minute chart. Okay, it's very similar. The concept doesn't change because psychologically, what is that telling us? Right, that we are getting a higher amount of confidence on the upside move, drawing more participants, and then as soon as the stock starts to level out and pull back, the participants dry up. Right, you're getting less people betting on the downside break, in this case, back below that 9 EMA, which is a psychological moving average that's heavily watched. So it is a small amount of bullish bias there. Into the close here, guys. This is actually really interesting. We got a very high volume close with very little movement, though. It's likely that this was both a mix of the last bar of power hour heading into earnings. That makes a lot of sense. Okay. Earnings after hours on Monday. This is, of course, from Friday. But also algorithmic rebalancing, which is likely to spill over into that first bar after the bell. Now, all that being said, let's move on here. Let's take a look at the psychological levels, anything that we can pull out here of the 30-minute. You can see that back on Thursday, we tested this 50 period and 200 period on the 30-minute and held them and rode higher the rest of the day. Here on Friday, we never got a retest. But what we did is we rose up about 3.5% on the day, right? And really, I think the most effective thing is pulling this 50 period up with it. The 50 period on the 30-minute chart is a very quick moving average in comparison to like the 4-hour and the daily, right? And if you're a bull and you're riding in this ideal scenario where you have both of these ascending, the 200 period and the 50 period ascending, along with the stock above both, you're in that kind of psychological sweet spot. Now, if we see a back test of the 50 period, bulls, you're going to want to see that hold, right? Because that's the entire concept of being in this position. If you can have ascending support and you're bouncing off that 50, it can help drive things higher and can help, I suppose, take some motivation away from from the bears. It can start to kind of discourage them a little bit in the very short term, which is, what you want. So any retest of that 50 period, you guys want to see that hold on as support on high volume, getting that bounce away on high volume. All right. Ideally, bulls, you want to see that 50 period getting yanked up as hard as possible, as close to the stock price as possible for that psychological kind of area of potential support, right? Kind of a safety net a little bit. Bears, your ideal scenario come Monday is to get beneath that 50 period with a high volume downside break through the white line, through the 50 period, a low volume retest, and a high volume rejection. Okay, reclaiming at least this as short-term resistance heading into earnings, I think would be a kind of a power move if you're a bear. All right, let's move on to the 4-hour chart and take a look. You can see here, guys, that on Friday, we reclaimed that 200 period moving average here on the 4-hour chart. That's a really good thing to see. So similar situation here, bulls. You can see that 50 period starting to get yanked up. Right, it's a good thing to see on higher volume, helping to yank that thing up at a more aggressive pace, right? Because on the 4-hour, this is going to take a little bit of time, all right? But listen, bulls, come tomorrow, come Monday, any retest of that 200 period, you want to see that hold as a psychological barrier back to the downside. See that hold as support. I don't care what it tests on as long as we bounce, right, on higher volume. And you can just take note of where that is intraday. It's a moving level, right? So have that on your charts if possible. And then you can watch that area on like the 1 minute or the 5 minute or even the 30 minute to get a better idea with more information. Well, the similar amount of information, right? But presented in a more easily digestible way with more candles, because it's a little bit difficult to try to look in hindsight at the 4-hour since we're only dealing with 2 candles in a full day to get kind of like the more in-depth insight into really how the price reacted to certain levels. Okay, now bears, again, similar to the 30-minute here, a power move for you guys would really, I think, be to give up that 200 period and actually reclaim it as resistance here. The 200 period on the 4-hour, reclaim that as resistance heading into earnings. That would be a good thing to see. But that leaves us here with the most important chart of all. That's the daily. You guys can see here that the daily has a lot going on right now. A couple things happened here on Friday. We reclaimed $23 a share. We broke out of the $21.30 to $23 channel. Bulls, that was a really good thing to see. Not only that, but we attempted and sort of held the 50-day moving average. We haven't been above that really since briefly here back on April 4th. Okay, and we haven't actually been above it since April 1st, or at least held above it, right? So it's been a little while here. It's been a little over a month, and here we kind of barely are testing it right now into the close back on Friday. So listen, Monday's trading day heading into earnings. Bears, you want to reject hard downside off the 50-day moving average, and really ideally, if you could also give up $23 a share and get back in that channel, that would be a good thing for you guys to see. If you're a bull, back testing 23, you would want to see that hold as support to avoid re-entering this channel, but really, bulls, you don't want it to get that far. Ideally, you just want to hold the 50-day as support, but it is testing right now, and Monday is going to be a decision day in terms of the 50-day moving average. And bulls, you're going to want to hold that as support. Okay, it's obviously a necessity to hold this before we can make a move and push up toward 25, and this could help out in doing so. All right, now implied volatility, it's high. Okay, I'm warning you now. This is very likely. It happens the majority of the time. It doesn't happen every single time, but the vast majority of the time after a stock reports earnings, IV is likely to tank the following day. Why? Implied volatility is literally the expected volatility being priced in by the options traders, the expected volatility of the stock being priced in by the options traders. This is real data. This isn't made up. This is priced in by people and algorithms. So when that line is higher, it means that the options traders are pricing in more volatility in the future. Okay, now Doesn't that make a lot of sense heading into an earnings report, right? It's a market moving, it's a stock moving catalyst. Because, you could see it, you oftentimes see a fundamental repricing of the stock after we get more information, right? That makes a lot of sense. And after earnings are released, the fact that IV would drop because you're seeing option traders expecting less volatility now that the catalyst is out, it's over, that also makes a lot of sense. So when you're buying options, calls or puts, heading into an earnings event, not only are you making a directional bet, you are making a directional bet that is basically saying, I think I'm going to be correct directionally, but I'm also thinking that I'm going to be correct directionally enough to outrun what is likely to be implied volatility crush, which can suck if IV falls, right? It can suck Vega value, literal value out of your contracts through the Greek Vega if IV falls, which it likely oftentimes does after earnings. That's why you see a lot of people selling options and taking their directional position that way, being on the short side of options, right? Because if IV falls, that benefits the seller. But listen, if you're looking at all of this, and we're going to look at expected move here in a second, which will give us more insight into the volatility expectation. But if you're looking at this and you're like, I have a strong directional bias, and I also think that we're going to move more than the market expects, well, then buying options might be something that you think about, right? Because that's the position you would want to take to put yourself on the right side of both volatility and direction. Okay. Now, speaking of that, let's take a look here at expected move. The next expiration that we have is going to, of course, be Friday. So the expected move by Friday, remember, we don't have the luxury of daily expirations here on Palantir. The expected move by Friday, the close on Friday compared to this last Friday's close, is plus or minus $3.34 per share. So what a lot of people would do, because this is what we do on most days, is they would divide that by 5 trading days. Okay, and then they'd add 50%, maybe they would add 50% back. If you just divide that by 5 trading days and say, okay, that's 67 cents plus or minus expectation on Monday. Hang on. First of all, that assumes 5 green days or 5 red days, so that you're already looking at that in kind of a silly way. To fix that, at least attempt to, in this market, I'm adding back 50%. That gives us about plus or minus $1 in expected movement on Monday. But hang on, that's not good enough because we have a catalyst. There is more volatility expected on Monday and Tuesday than there is Wednesday, Thursday, and Friday, because the day of and the day after earnings, right? Because Tuesday is really the first intraday session after the earnings are released, because they're released after hours. So you're dealing with lopsided expected volatility. So let's do the best that we can, and we can do that by looking at like the following week. Okay, so in the week after earnings, and this is a little bit of guesswork, but we have to do the best we can because, I mean, if you think about it, all trading is a little bit of guesswork, right? And the people who do the best, most effective sort of quote-unquote guesswork make the most money. So if we look at the week after, okay, this isn't like this coming week, this is the week after, the difference between that expected move by the 17th and the 10th, the difference there is 38 cents, which tells us that the expected volatility from the 10th of May to the 17th of May is literally only plus or minus 38 cents. Now that tends to increase as time gets closer. All right, but it won't increase by dollars. I'm talking like more like pennies. Okay, so if you look at this, by the end of this week, it's plus or minus $3.34, which tells us that if we look at that and we really think about that, the expected move being priced in purely for Monday and Tuesday, I mean, the market really is expecting multiple dollars of movement plus or minus potentially. Okay, so just Monday, before the earnings are actually released, you're looking at a smaller chunk, but still pre-earnings volatility. And then by Tuesday, you get the earnings priced in, and you're looking at adding even a bigger chunk of that 334. So listen, with a little bit of guesswork, what the market is really telling us here is that I believe the market kind of expects the majority, if not the vast majority, of that plus or minus $3.34 move to be priced in kind of like by Tuesday. maybe even Monday after hours after earnings are released. Okay, but as far as the intraday sessions, by the end of Tuesday. All right, now remember, again, you'll just have pre-earnings volatility heading into the close tomorrow because the earnings won't be out till after hours. So something to think about here. You can't do the math like we do any other day on another stock. It wouldn't make sense to do so, and you would be left with a quite an inaccurate, in my opinion, read of what the market is actually expecting and actually pricing in day by day, since we're only given weekly expirations. Now again, by design, if you're new to expected move and implied volatility, by design there is no directional bias baked in. It's the volatility expectation. We get the directional bias by first doing the analysis, everything that we did leaning in, and then the last thing we can do to pull out a literal directional bias out of the traders. Okay? The traders can be wrong, but this is what they're saying. This is all the volume that we saw on Friday. 447,000 total contracts traded approximately. About 339,000 of those were calls and about 107,000 were puts. So we're seeing a call side bullish bias on the overall ratio. And if you break it down by time frame, the 0 to 20 delta range, the short-term speculators, we have 85,000 calls and 48,000 approximately puts. So still a heavy call side bias. The call side bias does get a little bit less extreme than the overall because we're seeing more puts baked in on the short-term speculator side, but still a bullish bias out of the short-term speculators, as well as that heavy overall call side bias on the overall call put ratio. But remember, that was from Friday heading in to Monday, which we still won't have earnings during the intraday Monday session. So I encourage you to keep track, if you can, of the live call put ratio, since the video tomorrow will come out after earnings are released. And, with most brokers, you can track the call put ratio live as the volume is flowing in. Listen, guys, if you appreciate these daily Palantir uploads, I ask you to do one thing. It takes half a second. It's 100% free. Please leave a like on the video and then get out of here. Enjoy your day. I appreciate it, and I'll see you in the next one.